Hi there, welcome to Kneppy Invest. One of the things I want to do moving forward with this channel is to bring you more Appendix 4C and 5B videos. And one way I'm going to do that is to shorten some of these videos, maybe make them 5 to 7 minutes long, that sort of thing. And that way I can record more of these videos and provide or share more companies with you. And in today's edition, we're going to look at a company called ECS Botanics. This is a marijuana company. For remember 5 or 7 years ago, marijuana was all the rage, not only on the ASX, but also international exchanges. And then the bubble burst. These valuations of these companies fell from ridiculous levels. And now, even though no one is talking about marijuana companies, they're looking way more interesting because some of these companies are profitable. They provide dividends to the shareholders, and also they're free cash flow and operating cash flow positive. I did a video on ECS Botanics about 1 year ago. It would have been January, February of 2023. And the catalyst for that video was the December quarter results in financial year 23. So this company is Australian medicinal cannabis cultivator and manufacturer. So the point of me doing, or the reason I'm doing this video, is just to see how this company has progressed over the past year. So we're going to look at, or I'm going to look at the December quarter results from 1 year ago and just compare them to the December quarter results they just released in the past few weeks. So let's go back to December quarter financial year 23. And this actually, Appendix 4C did draw my attention simply because the company was operating cash flow positive. It was a small amount, but $173,000 is positive. Receipts to customers, 3.9 million. Now, even though they were operating cash flow positive, because they spent $1 million in capital expenditure, which is property, plant, and equipment, they were not free cash flow positive. So they were in that interesting position where they were operating cash flow positive, but free cash flow negative. So not quite the inflection point I am looking for. They also disposed of a business, sold a business, and they received $3 million from that disposal. And that was actually beneficial for the company because instead of having less than $1 million of cash on hand at the end of this particular call, they had about $3 million of cash. So let's have a look at the December quarter for financial year 24, just to see how ECS Botanics has progressed in the past year. And in terms of receipts, this company is progressing really nicely. Receipts up $2.6 million. And that is a big positive in my books. That's the first thing I always look at. Then after seeing receipts have increased, I went to the operating cash flow and I saw that operating cash flow hadn't increased all that much, only by just over $100,000. And straight away, that is telling me that this company has not reached any scale or any operating leverage. And what I mean by that is they've increased receipts by 2.6 million, but product manufacturing and operating costs up 2.3 million, staff costs up 200,000. So the increase in receipts have been matched almost completely by the increase in costs. And I want to see, and no doubt the market wants to see, a little bit of scale. They want to see receipts growing at a greater rate than the company's spending. And at this point in time, ECS Botanics has not reached that position, that point. And that also means cash on hand is remaining steady, about $2.6 million. Another thing to keep an eye on when it comes to this company is their borrowings. They increased their borrowings by $260,000. Whenever I am first researching a company, the first thing I look at is receipts or revenue history. I want to see receipts or revenue growing through time. That is the number one thing on my checklist that I'm always looking at, because if a company can't grow their receipts or revenue, then how are they going to grow their profits? They could grow their profits from increasing their margins or decreasing their costs, but increasing your margins or decreasing their costs is only sustainable for a short period of time. Do you know what is sustainable for a very long period of time? Increasing your revenue. That is actually, or that could be increased infinitely, but you can't infinitely or decrease your costs or increase your margins, because margins can only get to 100%. And costs can only get down to zero. So that's why I like to focus on revenue or receipts growth. If I see a company who is unable to grow their receipts or revenue through time, that's an almost uninvestable company for the long term. And we don't have that problem with ECS Botanics over the past few years. receipts are growing nicely. Now, a fair bit of lumpiness there, not a fair bit, a little bit of lumpiness there. And we saw that between the June quarter and September quarter in 2023. Receipts fell from 5.2 million to 4 million, but that's nothing to be concerned with. And you can see now with the December quarter receipts up to 6.5 million, trajectory in the growth receipts is still intact. But the market is not interested in this company at all. And this is the daily chart going back to May of 2021. Share price in a downtrend from the start of this period all the way through to about the middle of 2023. Now the share price is going sideways, consolidating. Now, this is an interesting stage that ECS Botanics find themselves in, because if the company releases a really good positive financial report, either Appendix 4C or half-year, full-year results, that's when we can see a breakout in the share price. What I want to see alongside or coinciding with the breakout is high volume. And if I see high volume and a breakout in the share price, that is telling me the market is becoming interested or even excited about this company. And we're not quite there yet for ECS Botanics. And I think that's the reason why the market's not excited about this company, is because they are remaining in that zone between being operating cash flow positive and free cash flow negative. The market wants to see profitability. The market wants to see operating cash flow and free cash flow positiveness. And at this point in time, ECS Botanics is not quite there. That is all I have for this video, looking at ECS Botanics December quarter results for financial year 24. If you have any thoughts, any questions about this company, if you're a shareholder of ECS Botanics, I'd love to hear your opinion about this company. So leave your thoughts, your opinion in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.